The digital currency world faced a stark reminder of its inherent risks yesterday. On May 22, 2025, a severe security breach struck the Cetus Protocol. Cetus is a prominent player in the decentralized finance space. It serves as the main liquidity provider and decentralized exchange on the SUI network. This incident sent shockwaves through its user base and the wider SUI ecosystem. Over $200 million in liquidity was illicitly drained from the Cetus Protocol. CryptoSlate reported figures closer to 223 million. Crypto News indicated the total could be as much as 260 million. The exploit on Cetus Protocol was not just a financial loss, it was a critical event for the burgeoning SUI network. The sudden and large-scale removal of funds created immediate instability. It also raised urgent questions about the security measures in place. The incident served as a harsh test for the resilience of both Cetus and the broader network it operates on. We will examine the root cause of the exploit. We will trace the attacker's actions and the devastating impact on the protocol and market. Finally, we will discuss the important clarification that this was an isolated issue within Cetus. The Cetus Protocol team moved quickly to communicate with their community. They provided an initial explanation for the catastrophic loss of funds. According to their statements, the incident was not a result of a direct hack. Their core infrastructure, they claimed, remained unbreached. Instead, the vulnerability lay within their Oracle system. An Oracle in the DeFi context is a crucial piece of technology. It feeds external data, like asset prices, into smart contracts. This information is vital for the correct functioning of a decentralized exchange. The team emphasized this point to prevent wider panic. The vulnerability was specifically located within the smart contract system. This system governed how the protocol interpreted and used price information from its oracle. The flaw essentially created an opening for manipulation. An attacker could potentially feed misleading price data or exploit how the protocol processed that data. This would allow them to trick the protocol into undervaluing or overvaluing assets. The pricing mechanism therefore became the point of failure. This bug in the oracle's pricing mechanism was the Achilles heel of the Cetus Protocol. Understanding this root cause is essential to preventing similar incidents in the future. The individual or group behind the exploit acted with precision and speed. They successfully gained control over SUI-based liquidity pools within the Cetus Protocol. Once this control was established, they began systematically emptying these pools. This was not a slow bleed, it was a rapid and continuous drain of assets. The attacker focused on pools containing SUI and other valuable tokens. Their actions demonstrated a clear understanding of the vulnerability they were targeting. The community watched in dismay as funds rapidly disappeared from the protocol's smart contracts. The method used to exploit the Oracle bug was quite sophisticated. Reports indicate the attacker employed a technique involving spoof tokens. By creating a pool with a spoof token and a tiny amount of a legitimate asset, they could manipulate the Oracle. The Oracle, misinterpreting this manipulated pool, would then report incorrect prices for legitimate assets in other pools. This price manipulation was the key to unlocking the protocol's treasury. The exploit was first detected around 3:52 a.m. Pacific Time on May 22nd. Blockchain investigators quickly identified the attacker's primary wallet address. The digital trail, though complex, began to form. The impact on specific liquidity pools within Cetus Protocol was immediate and severe. The SUI USDC pool, a major trading pair, was among the first and hardest hit. This pool alone reportedly lost approximately $11 million in the initial stages of the exploit. Liquidity providers who had staked their SUI and USDC in this pool faced substantial losses. The rapid depletion of this key pool sent an early warning signal. In response to the ongoing attack, the Cetus Protocol team took decisive action. Around 4 a.m. Pacific Time on May 22nd, they suspended the protocol's smart contract operations. This emergency measure was crucial to prevent further losses. By halting transactions, they effectively cut off the attacker's ability to continue draining funds. While this action also froze legitimate user activity, it was a necessary evil. The priority was to staunch the bleeding and assess the full extent of the damage. The repercussions of the exploit extended far beyond the SUI USDC pool. Many other tokens that were paired with SUI on the Cetus exchange experienced catastrophic collapses. The prices of these tokens plummeted dramatically. This created a domino effect across the SUI ecosystem tokens listed on Cetus. The damage was not contained to just SUI and stablecoins. The exploit on Cetus Protocol triggered significant tremors across the wider market. The price of SUI, the native token of the SUI network, experienced a sharp decline. It dropped from approximately $4.19 to $3.62. This represented a nearly 14% decrease in value in a short period. Such a drop in the network's primary asset reflected the severity of the situation. Cetus Protocol's own native token, Cetus, suffered an even more dramatic plunge. The Cetus token price fell by over 24%. It crashed from around 26 cents down to 15 cents. Although it later showed a partial recovery, hovering around 17 cents, the damage was substantial. The pain was not limited to SUI and Cetus. A wide array of other tokens within the SUI ecosystem also saw their values collapse. This included several memecoins popular on the network. Tokens like Lofi, Hippo, Squirt, Slove, and Memefi recorded devastating losses. Beyond individual token prices, the overall health of the SUI network's DeFi sector took a hit. The total value locked, or TVL, on the SUI network saw a noticeable reduction. Restoring this TVL would require rebuilding trust. In the immediate aftermath of the exploit, the Cetus Protocol team began intensive efforts. Their first priority was to acknowledge the security incident publicly. They quickly communicated that they were aware of the problem. They also stated they were actively working on a fix. A key part of their early messaging was to urge users to remain calm. They sought to prevent panic selling or the spread of misinformation. Transparency, even in crisis, is often appreciated by users. A crucial aspect of the response was the collaboration with Mysten Labs. Mysten Labs are the original core contributors to the SUI blockchain technology. Cetus Protocol worked closely with Mysten Labs and the SUI Foundation. This partnership aimed to investigate the exploit thoroughly. They sought to understand its mechanics and identify the attacker. Furthermore, they collaborated on strategies to recover the stolen funds. The investigation and recovery efforts were not limited to just Cetus and Mysten Labs. Several other prominent blockchain security and analytics firms also became involved. Adding to the collaborative spirit, Changpeng Zhao, or CZ, the founder of Binance, publicly offered assistance. CZ's offer signaled support from a major industry player. One of the most significant actions taken was by the SUI Foundation. They moved to blacklist the attackers' identified wallet addresses. This step was taken in coordination with the SUI Network's validators. Validators are the entities that confirm transactions and secure the network. By working together, they were able to freeze a substantial portion of the stolen assets. This action effectively trapped these funds on the SUI network. It prevented the attacker from moving them further or cashing them out through legitimate channels on SUI. The asset freeze proved to be remarkably effective for funds still on SUI. Approximately $162 million worth of stolen assets were successfully frozen on the network. This represented a large majority of the total amount drained from Cetus Protocol. The ability to freeze assets in such a manner, however, also sparked some debate. Discussions arose within the community regarding network decentralization and the power of validators. In a further attempt to recover the remaining funds, Cetus Protocol made a public offer. They announced a white hat bounty. Initially, this bounty was reported to be $5 million by CryptoSlate. Crypto News later reported it was increased to $6 million. Throughout the crisis, both the Cetus Protocol team and the SUI Foundation emphasized a critical point. The security incident was isolated to the Cetus Protocol itself. This was not a hack of the SUI network. The SUI blockchain remained secure and operational. This distinction is crucial for the SUI ecosystem's perception. It differentiates between an application-level vulnerability and a network flaw. User confidence hinges on such clarifications. In the wake of the exploit, official communication channels were active. Both the SUI network team and Cetus Protocol issued statements. They consistently urged the community to remain calm and patient. A key piece of advice was to avoid spreading FUD. FUD stands for fear, uncertainty, and doubt. In the crypto world, FUD can exacerbate market volatility and lead to irrational decisions. By encouraging a measured response, the teams aim to create a more stable environment. The decision by SUI validators to freeze a large portion of the stolen assets sparked considerable discussion. While many lauded the quick action for recovering funds, it also raised questions. Some community members expressed concerns about the level of decentralization on the SUI network. They questioned the implications of validators having the power to freeze assets. This led to debates about potential censorship resistance and the balance between security intervention and permissionless principles. The efforts to recover the remaining unfrozen funds are ongoing. This incident serves as a stark lesson for Cetus Protocol and the broader DeFi ecosystem. The critical importance of robust Oracle security cannot be overstated. The entire DeFi space can learn from this exploit.